right now as well. Good morning, everybody. Good morning, Timothy. Thanks for saying that. I saw you there. Just was a little busy setting up. Good Lord, there's just a really massive red down spike on SPY going on right now. And that's pushing down tech hard. Apple's dropping hard. Tesla's dropping. Like I said, oil. Rates are just popping up. We may have just a little bit of a replay of yesterday at the open, so be careful. The day could be very tricky. What's happening now, I don't know if it's a short-lived spike blip, but the day could be very tricky. Be careful. Oil is pushing down, and that's kind of bringing the market down. And rates just popped up. Not sure what happened. It could have been some kind of a news that was released at the 9 o'clock hour, and it wasn't positive for the market and caused a little bit of inflation pop there. The VIX just popped up as well, a little bit. It's going to be a tricky day trading today because if the market starts going down like it did yesterday, let's say oil and going down, rates are going up, something like that, which already just started happening, we don't know if it's going to be short-lived. And the instinct says, oh, man, I'm going to get on top of it this time because I didn't catch it yesterday. Well, that's exactly how the chess masters want you to lose your money. They're going to set you up. They'll give you a little drop, and everyone's going to be like, yoo-hoo, and then everyone loads up like with FOMO to the downside, right? Loads up on puts, and then lo and behold, the whole day just starts running green, and everyone loses all their money because they went to the put side. So that's how difficult this game is. You're going to have to be on your toes, and you need to be a step ahead of a step ahead in order to be anywhere near even halfway safe with your money. So just be very careful on a day like today after a big, huge drop like yesterday. There could be a lot of games start to begin on the market once that happens. And that's just how billions of dollars in hedge funds and market manipulators and market makers use their money, as you would if you were that person, responsible for providing gains to investors, and you had billions upon billions of dollars that you were trading in the market as a hedge fund. Then, that's the way you would be. It's not nice. It's not nice, but that's what makes the money, is being a step ahead of the other guy. What you talking about? Good morning, by the way. I'm sort of trying to follow you. You got 157% return on Amazon calls. Is that what you're saying? All right, very cool. Hey, if it's on the chart, it's on the chart. It's in the charts. All right, so we're just starting kind of to see direction. The market kind of remained a little bit positive this morning compared to yesterday, but just now, oil started to drop, and then the market started to drop, and rates started to pop. Now, oil is actually pulling up a little bit off the bottom. So this is going to be interesting to have to track, and it's going to be a tricky first hour or two on the market. and opening. So in the meantime, let's check if there's any spikers on the morning that we'll be able to get some good gains on during the first few minutes of market trading. We have SPCB. And SNES. Wow, SPCB with a huge spike there. But the question is that a merger? Because it's kind of hanging out in one spot. Reoccurring revenue. It's a contract win. Yeah, that can do all right. All right, we'll watch how that develops. SNES, not Nintendo. I mean Sony. Say, what is SNES? Sega? It's one of those. And SNES, this particular one, not with the most bullish pre-market shape, but there could be something there. The pivots to watch for are going to be 3.41, 3.71, 4.01, and 4.61. So a couple pivot points we'll be watching for on SNES. Also, Zkin has been moving. CLVS or Zkin. Yeah, so CLVS is the next one. I don't know. Let's see. I'll tell you. I can tell you which one looks better. All right, Zkin pulled back more than 50% off of its spike. So that's not a good sign. Whereas CLVS seems to be holding and it also has pulled back about 50%, but not as dramatically. It's not dropping as dramatically as Zkin is off its spike. So it looks to me like CLVS may run today. So SPCB, CLVS in good shape, SNES in good shape to run. It is a COVID Internet of Things approval. Okay. Let's see. FSR, probably too big of a company, not big enough of a gap, too large of a float, and not enough volume. So we'll stay out of FSR. AAME, low float, 16% gap. Let's see. Where can I put that one? AAME. Just take a look at that and see what it looks like. Financials are falling off a cliff a little bit this morning right now on that move, which makes no sense to me because rates are going up. And yesterday they fell off the cliff with oil, but now oil's coming up off the bottom. So financial sector, getting a little funny. The Fed will not extend an emergency move that has made it cheaper for big banks to hold cash. Okay, so here we are. I'm reading exactly why financials seem to be dropping. They will not extend an emergency move that has made it cheaper for big banks to hold cash and U.S. government bonds on their books. Instead, it will shortly seek comment on the SLR adjustments, making sure they do not erode the overall strength of bank capital requirements. That's interesting because that signals a little bit that they're having to rein in the capital markets a little. In other words, maybe there's a little worry of bubble going on there uh, economically with inflation and dollar and the banks and how much power they give the banks. And interesting. So that might spook the market a little bit. I could see why. But oil is like rising off the bottom. So certainly, I think the market, if it got spooked, it was because of that news, not oil. Well, we're probably going to get out of JFIN if it doesn't hold. I have it up. I'm watching it because it's one of our positions. But yeah, it broke the B already, but it's kind of bouncing off of it. So technically, you should get out. I kind of want to see what it does at the open, but technically, you should get out. So if you want to follow the technicals and you get out, then you can be your own hero because if it drops at the open, you made the right move. If it drops, you could lighten up your load. That's one thing you could do. So that is what I'll do right now. Because there's like multiple points along the between B and C we can get back in if JFIN starts running up to break C, right? So why panic about like why keep the FOMO on, right? Okay, and the extended hours. It markup. All right, there we go. I got a decent fill. Yes, swing on the spiral. SPCB is dead center on our screen. But one concern about it is that it's really not putting in more bullish spikes. So there's something wrong with it there. I'm not sure what it is. But probably what looks the best this morning is CLVS. All right, market opens in 16 minutes. We are at a prior support level, a congestion zone on the market. So we have that running in our favor now. But if the market were to break, let's see what number that is. 385. Where are we right now? 390. So if the market were to break 385, that would be a decent panic level. That's a 5-point drop from here. So it'd have to be a pretty bad day for it to do that. I think we're pretty safe today. All right, well, so we know what we have on radar. Why did the market dip just then? Fed had some news that they're not going to be uh, being so what's the word? So liberal with the strengths that they give the banks right now. And I think that sort of is an indirect signal that they're a little bit worried that uh, capital markets might have been getting close to popping. The economy, some kind of bubble might have been growing. So I think that scared the markets a little bit. It's really not that, it wasn't that big of a blip, so it's a little bit minor concern. It was a Fed announcement. I mean, reread it again. Like after I just said that, now reread it again and see how you feel. Like, what do you think? What do you get out of that? That's what I get out of it. It's like it's not gonna let run freely whatever was running freely. I mean, just think of it abstractly, right? Fed's like, we're not going to run freely what we've been running freely with the banks and government, how much it can leverage government bonds in the economy. So it says instead it's going to shortly seek comment on those adjustments to make sure they don't erode the overall strength of bank capital requirements. And that's like a little bit alarming. It just like just the other day, like was it not yesterday? Like everyone, the chairman where the Fed was saying, all right, we're on track and XYZ, right? And now this morning they're like, they're gonna not extend the particular move, which gave banks a little bit of freedom. They're going to rein them in a little bit. So it's interesting, So in any event, it's already retracing halfway off of that drop. Yeah. And I'm watching oil because oil is going to move the markets a little bit if it moves. And oil seems to be bouncing off of a low that it just put in. So energy's at the bottom end. XLE energy and energy stocks are at the bottom end of their recent trading ranges. It could easily, it could easily be a bear trap as well. I mean, if this market starts dropping again this morning, the instinct's going to be, okay, pile into puts, essentially short, and that could be exactly what market makers are looking for, and then they'll just rip it right out from out underneath you and pop the market, make it run up green, retrace. Look, green day today would have a long way to go to erase what happened yesterday, to make insignificant, irrelevant what happened yesterday. So there's a lot of room here to go green and still be a manipulation on you. So watch out. It's going to be a very tricky day. They can play a lot of games within yesterday's candle. Well, frankly, yes. It's in a downtrend. So until that can turn around, then and now NASDAQ is in a downtrend. You just got to follow that, It hasn't been able to make higher highs on the pivots. All right, 10 minutes to the market open. Right, I know. And Powell's speaking next week 3 times. So these are the kinds of days and moments when hedging makes sense. But it is very difficult with smaller accounts because of the pattern day trading rule. You want to be limber. You want to be able to go like, oh, no, I was wrong, snip. Oh, no, I was wrong again, snip. Oh, it's going the other way. Okay, flip. You want to have that freedom. to go, oh, clearly, this is going down, this is going up. All right, let's short that, let's long that. Oh, I was wrong. Let's go the other way on those. I mean, just the faster you can adapt on these days and put on your hedges, the better. That's what today's going to be like, Charlie. Oh, and so if you can't be limber like that, or you can't put on hedges, or you don't know how, or you just scared in general, you absolutely should be sizing down today. You should be just playing it safe, and that maybe that way all next week as well. That's perfectly fine, because if you're going to start to turn up the volume knob on a day like today, just because you want to make more, you may end up losing more, than you had hoped for. So that's why professionals size it down, be careful, put on hedges, do what they can when the markets are like this. When the markets are smooth, bullish, running, you don't need hedges. I mean, if you can find them, they're great because they'll give you more alpha. But if you can find something that's just continuously going down in a bull market, you can short it, uncorrelated to the market going up. But in a bull market, or in a predictable market, or not a mixed market and a stagnant, sideways, uncertain market, but in a bull market, you don't need to do any of those hedges, and you can size up galore. So be careful. That's if you're worried about losing your money today, size down. And yep, it is quadruple witching day. So, but that usually doesn't come into effect until like the last hour of the market. Well, you will see some things start to happen throughout the market. But again, that's going to be mostly on like mid caps and big caps. You're not going to see that on micro caps, or like, all these penny stock plays were going on. But where you'll see that in the last hour of trading, then the last 30 minutes and the last 10 minutes are going to be insane. And the last 3 minutes are going to be nuts. And there'll be no predictability to the direction on that, because it's going to be based on basically what happens is these are the days where hedges are released. They're released or rolled or covered, or, it's a bit complicated, but, they need to cover their options positions. And so with actual purchases, right, in order to close things out, protect them, release them, put more on. It's just, and you never know which way, you really don't know which way it's going to go. But what you can be sure of is that volatility is going to get out of hand. And frankly, you have to watch out. There'll be some people who will be on the right side of the thing, and it'll pop, whatever, and they'll be like, woohoo, man, I love quadruple witching. Next time, they'll be like, okay, I'm gonna put all my money, and they can go the other way, and they'll lose as much as they made in 3 months. So, or maybe more. So I think the best way to play quadruple witching is just stay clear of it. Quadruple witching means that this is a day in which everyone has their contracts expiring in all the different markets that offer options. And because of that, there's a lot of because those options are used often as hedges. What I just said, then they have to go into the actual assets, not the options. They have to go into the actual assets and buy up or cancel out or increase their positions versus that in order to retain them moving forward or roll. And there's a lot of adjustments have to happen. Nobody wants to do that until the end. And it's just a crazy moment in the markets when it does that. All right, it looks like CLVS is really looking good. I'm going to type that up, CLVS, and it looks like SPCB starting to go bad. And I do like SNES. I think my two probably picks of the day are CLVS and SNES. But quite literally, when we pull up these opportunities, we are just fucking dead wrong every time when it comes to these spikers, and everybody is. There's really, it's really difficult to know which one's going to run. We're also looking at Zkin. By the way, for anyone who's came late, we did lighten up our position on JFIN as it broke um, the B point in the ABCD pattern. I'm not familiar with that rule. I don't think, Rosa. I'll take a look at that like when we are resting more in the markets here. All right, 3 minutes to the open. XLF, is that a good candidate for puts? Maybe. I mean, it dropped on that word just then. So yeah, maybe. Oh, it has something to do with like GME stuff and squeezes, Rosa. Okay, well, I'll look into it. I'll look into it. Oh man, I don't know. I have my GME is not up. Is GME doing something? All right, everybody on YouTube, thanks for tuning in. That's the end of the morning show, and we're going to switch over to live stream day trading in our trading group Discord. You've got the link there. Feel free to click it and come join us. All right, have a good one.